For today, joining me is market expert Sunil Subramaniam. Hi, Mr. Subramaniam. Great to have you on the show on a day when the Sensex has also clocked a major milestone, 80,000. And Rajesh pointed out that 90,000 in the next few months, can't be ruled out. Would you concur with that? And do you think we will end the year around somewhere around 90,000 or thereabouts?
Yeah, I think I do concur with that because I think by and large this Sensex rally so far I would say has been driven by domestic flows. FIs have been blowing hot and cold based on anticipated election results, various news flows and all of that. But now with the government coming and settling down, all those concerns are away. There's expectation of very strong, robust reforms process underway now. And I think that the monsoon also has come in advance. That's good news for us. So I think that overall, if you see that FII flows coming back would definitely take the large cap indices. As you know, the middle small cap indices are trading at a record premium to the large cap. So there's a lot of catch-up rally on the large cap. So a Sensex target of 90,000 in a few months by the year end, I think is quite a possibility.
All right, 90,000, quite a possibility on the Sensex. But let's talk about the stock of the day, HDFC Bank. It has seen a good 3% kind of an uptick. The foreign headroom has gone up and, it has the potential of weight increase on MSCI. In fact, it could even double and expectations of $3 to $4 billion worth of inflows. But do you think this weight increase or do you think the stock will see a major front running ahead of this event that comes up in August? So is there room for much more upside on HDFC Bank from here?
I would agree. I think that there's no problem with the quality of the bank. I think by and large the merger process with the parent has been handled well. I think one of the reasons there was selling pressure was the fact that people who were holding independently HDFC Limited and HDFC Bank had to consolidate, though some grandfathering portions allowed. So with all of that dust settling in, I think the quality of that bank, I think it remains supreme in the Indian market. And I would say that ahead of an increase in inclusion in the MSCI index, operators would generally come in and buy. So I do expect that this rally to sustain for quite some time in that because quality, I think, end of the day will prevail.
Okay, shifting focus to the SEBI circular on transaction charges, right? Yesterday we had Nitin Kamath tweeting that, they may look at ending zero brokerage, format, right? So how are you viewing this move, in terms of retail investors? Do you think it will hit volumes going forward? And how does it really bode for these deep discount brokers?
See, obviously for them now with this SEBI ruling coming in, their differential pricing to make money off a few will take a hit. So their business model got to readjust. Whether if you look at what you mentioned, that the ending zero, now even if he charges a little bit, he's already built a huge customer base. So I think that I think it's a very short-term, negative kind of a thought process. As the business model realigns itself, I think post-COVID itself, enough investors opening new demat accounts, doing F&O, I think have got into this habit of, dabbling in the stock market, if I may call it that. So I think that this kind of a level playing field, I think what SEBI wants to do is to create it more level. So I think the business models will take time to readjust, but in the long run, I don't see it impacting the absolute profits. I think just that the way the profit model works, that you give it very cheap to a large number and then they make money of a few versus making little money of a lot of people. I think that's just a reassessment. I don't think that in the long run it's going to impact these brokerages.
Mr. Subramaniam, I want to get in your thoughts on the IT pack once again, because in the last 1 month we've seen the IT pack gaining traction. Recently all the brokerages have been turning positive, but on ground there seems to be no improvement in the discretionary demand environment. Is it the fact that, revenues may have bottomed out, guidances may not be cut further? Do you think are these the factors that are driving optimism in the IT pack? Because Q1 is again expected to be a little weak. So what are your thoughts? What exactly is driving this up move in IT names?
So two things. One is the fact that I think a lot of passive flows are getting allocated into India. So when passive flows come, IT gets its share of flows from being a index heavyweight. So to that extent that, that money which coming in, and so despite not so great growth prospects, you still get buying capacity coming in. That's number one. Number two is, I think in an era of uncertainty around the world, this is a heavy election bound season for the rest of the world too. And in an era of uncertainty, there is a flight to safety. And I think Indian IT represents a very strong safety pack, because while you will not see strong growth upwards, you're not going to see a cyclical downturn in the IT. So I think that reallocation of capital towards the safety, and as more FII flows come in, to which I answered in your first question, right, I do expect the IT pack to continue to get buying support. So I think that it's just reverting to its pre-COVID days of being a stable, strong, resilient, safety-oriented pack, which is the right place for IT to be in, I would say.
But are you also, so you are also overweight IT?
Yes.
All right. I want to get in your thoughts on the power PSUs, right? In the morning, I was just reading a report by Bernstein, and they have initiated coverage on PFC and REC. These stocks have seen phenomenal run, but in the last 1 month or so, they have seen a fair bit of profit booking as well. But Bernstein has pointed out that investors are actually underestimating the duration and intensity of the power cycle, and these two stocks, these discoms, appear much more attractive in terms of valuations compared to the power peers. What are your thoughts? Because we've already discussed PSUs, in details in our last interaction. But has anything changed in terms of your views when it comes to the power PSUs in particular?
No, I think that the power is a long-term story. I agree with that report that it's a long-term story. It's just that in the last few months before this recent, whatever you said, correction or slowdown, there has been a lot of optimism and hope built into the prices. And that's just stabilizing. But I think this rally should again pick up speed, and for the very simple reason that a lot of domestic money, I think SBI Mutual Fund launched an Energy Opportunities Fund which raised 5,000-6,000 crores. Currently, ICICI Mutual Fund is launching, I think yesterday or something, an Energy Opportunity Funds. So these Energy Opportunity Funds will naturally have to go and look at power as a very key element of their portfolio. So if you're going to get 5,000-10,000 crores of money coming in over the next 3 to 6 months, which typically NFOs take to deploy into the market, you will see buying support coming in, and I expect these prices to again start rising now. But medium term, the power story is a very strong story, especially because there's also renewable energy power being built into the pack. As you know, India is going from a 70-30 ratio to a 50-50 hopefully by 2030, and there's 500 gigawatt of power capacity being going to be created even in renewable, and some of these PSUs may be in the forefront of leading that charge too.
So one should buy on dip. Is that the strategy one should follow?
Always. That's never a question.
All right. Last time I think we spoke, we discussed how the gap between value and growth is narrowing. I think with Sensex at 80,000, that gap may have narrowed further, right? So if one has to really look for, comfort, safety, value, which are the pockets you would identify for that purpose?
I would actually place my bets on 3 parts. One, I would say IT. Because like I said, that's the safety element. I think there's resilience there. The second aspect would be banking. I think again there, the indices haven't really gone up, but I believe the future of banking is very robust. So banking and financial services, again, it's a pack where I would place some emphasis. And to me, consumer discretionary is the story which I believe has some legs to run. So I think that these 3 would be where the market's attention has not been there so much. So I'm little playing contrarian here and saying that these will also play catch up. So these are element of safety in the overall valuation pack.
All right, that's the view then. With that, Mr. Subramaniam, would like to thank you for taking out time and joining in and sharing your thoughts with us. Always a pleasure, and I look forward to our next chat as well.
Sure, thank you.
Well, with that, let's go back to Rajesh then. Rajesh, your thoughts on persistent